start this video with an introduction to economy or simple economy. In an economy, when a person makes money that it's more than the money that he spends, this creates surplus, and the surplus is referred to in the economy as savings. Also, in an economy, when a person makes money that equals the money he spends, this creates equilibrium, which is also referred to be called also equilibrium in economy. In economy also, if another person makes money that it's less than the money he spends, this is going to create deficit, and the deficits need to be financed, which will going to create a byproduct, which is credit. However, since the introduction of the fiat currencies, it seems the world has been spending money more than the money that it generates, which created a deficit, and the deficit uh, needed to be financed over the history, and created something called the credit, or the global credit. And this word has been a lucky word because it have had so many ads on over the history. At the beginning, they've been looking at it in a positive way. They were calling it credit opportunity. Then, when the credit grow, they started to refer to it as a credit challenge. Then, when the credit grow more and more, it became a credit bubble, and recently they are calling it a global credit crisis. However, the global economy is not in a healthy situation. There's too much credit, and this credit means too much inflation, because there are so much money more than the things that the human have created over the history. The money is more than the things, which will simply create a huge amount of inflation. Moving on, let's talk about what happened to the global economy in the year 2020. Please remember that what happened in 2020 was just a trigger. The global credit has been made through decades of bad financial management. However, in the year 2020, the year started with the emergence and the spread of the coronavirus. And this is came along with the shutdowns, lockdowns, and the restrictions on movement and travel. The global response on the financial side was through the lowering the interest rate on the fiat currencies, and printing money, and issuing this fiscal and monetary stimulus bills. This has created some sort of fear of inflation, which is justified for the investors and traders, because the amount of the money that has been printed and injected into the system, it calls uh, for you to panic about what kind of an inflation has been generated. And there is now a belief that this money printing is going to go on and on. Moving on, we are going to talk about how a business idea can become a success story. Uh, it goes actually through this inverted pyramid. It starts with a founder or founders, whom they find something that they believe it's going to be useful for people, and they can sell it to them. It's either a service or a product, and it moves up to the associates of this founders, like either personal or business associates. Then it goes to an other level, which is the local community where this idea has been founded, and then it goes to the local media and international media. If it's there, it will start to take the attention of a group of people whom they are referred to as influencers, and they can create trends and fashions, and they can affect or influence other people's decisions to buy this product or service. At the last, it reached to the institutional adoption level. If the idea is adopted by big institutions, it's going to become uh, a big thing, or a big success story. Bitcoin is actually a success story, and it has passed through this inverted pyramid from the founder to the institutional adoption. Uh, Bitcoin is a blockchain technology, and technically, the blockchain is a system of recording information in a way that it makes it difficult or impossible to change, hack, or cheat the system itself. You can say also a blockchain is essentially a digital ledger of transactions that is duplicated and distributed across the entire network of computer systems. On the blockchain, each block in the chain contains a number of transactions, and every time a new transaction takes place, it gets reflected in the ledger. This is a bit, I think, technical definition. It could be hard to understand. That's why I get to this example. Before the year 2006, there was nothing called Google Documents. Google Documents is a service that allows you to share a document, and the shared document, any amendments happens to it, it's going to happen to the original file that you have already shared, and thus any of the files that has been shared, it's usually or at any point of time it carries an updated information, either the original file or the shared one. Before the year 2006, if you are going to make an Excel sheet, for example, and share it with a colleague, uh, you have to do it yourself and then save it and then send it to him or her by email, and he's going to open it and do the amendments as he wish. And at a certain point of time, you cannot, either you or him or her, you will lose track which one is the updated or up-to-date one. Thus, with the Google Docs, you can simply have a one sheet that it's shared among a group of people, but you are sure that any of these copies is up to date because it's all live. And this is what the blockchain simply does. Everything is live and everything is there. From a financial point of view, the blockchain technology is a mean to raise funding. It's somehow like the IPOs that we have into the financial system. If somebody has an idea and wants to start a company, he will do something called initial public offering to collect capital. Also, it's referred to the blockchain as of now, it's referred to as a store of value, like a safe haven or something of that sort. The top 10 cryptocurrencies, according or based on the market capitalization, it starts with Bitcoin, 759 billion, and then Ethereum, 139 billion, then Tether, 23 billion, then Ripple, 14 billion, then Litecoin, about 11 billion, then Cardano, 9 billion, Polkadot, 8.3 billion, Bitcoin Cash, 8.1 billion, and Stellar, 6.6 billion, and Binance, 6.1 billion dollars. It's about a $1 trillion. These numbers uh, is as of closing of yesterday, and it might have changed, but all over this is usually the list and the order of the 10 major cryptocurrencies in the world. Moving on, we are going to talk about the similarities and differences between Bitcoin and gold. Uh, Note that I'm not talking about precious metals versus blockchain. I'm talking about only Bitcoin versus gold. Similarities, both of them are store of value. Both of them are exchangeable to uh, either other fiat currencies or any other things. Both of them have a limited supply and security. Of course, both of them are secured, and both of them are priced against US dollar and other fiat currencies, and both of them referred to as inflation hedge. On the differences side, gold is physical, Bitcoin is virtual. Gold has more history than Bitcoin, big time. Gold is less volatile than Bitcoin. Bitcoin does not need storage or does not need your attention or care about storing it as much as you need with gold. Acceptance. Gold is more acceptable than Bitcoin as of now, at least. Ease of use, crypto and Bitcoin is more easier to use than gold, and transferability. Sure, Bitcoin is more transferable than gold. Same to what we have in the business, as we know, the real business, not the virtual business, the real business. If you have a company and you want to take your company to the next level, then you are going to do something we call it, or it's known in the finance world as IPO, initial public offering. You take your company and it become a corporation, and you will get the funding needed from the public. Same to that in the cryptocurrencies, there's something called initial crypto offering, and it's, as I said, it's the equivalent of the initial public offering. If you have an idea, Then you get your idea to work. You do a part of it, then you promote it, and then you issue the coin. And as simple as that, you will get funded. People will buy your coin, and you will get the money you need to start your business or your idea. Sure, there is too much paperwork and things to be done in between, but this is how it goes. Moving on, let's talk about how a crypto rally, rally of prices goes. Uh, it's very much similar to what happens usually in the precious metals market. Usually gold starts, then silver's trying to catch up, then gold pauses, then silver started to outperform. In the meanwhile, the mining stocks will be flying. Same to that here in the cryptocurrencies, Bitcoin takes the lead, and then Ethereum, we will see it trying to catch up. Then Bitcoin will pause for some time, and Ethereum will start to outperform the Bitcoin. And in the same time, the altcoins, the other coins, they will be uh, moving up, and at a certain point they will start to move up in a crazy way. And the last stage is when there's too much ICOs that it makes like 10x's or 100x's of its price once it's on the exchange. As we talked about exchanges in the crypto industry, there's something called exchange, and the exchange is the place where you exchange your cash into cryptocurrency, or you exchange one cryptocurrency into another. This is the place where you do this sort of transactions. Uh, these are like five of the best exchanges, and it starts by Coinbase, then Kraken, then Binance, then Gemini, and Huobi. Of course, Coinbase is referred to be the most esteemed one. Uh, the exchanges are different in the features and the fees that you pay, and also on the coins that you can trade. Some coins they don't get the chance to get into an exchange like Coinbase or like Kraken, so they go to an exchange that it's not known, and for some reason you need that coin. So that's why there are so many exchanges of cryptocurrencies. However, this is for this video. I wish that you got some idea about the cryptocurrencies world, and I will be issuing other videos when I see an opportunity in this market, maybe in a few days.